If you don't follow him, you should, at Trade Nomadic on Twitter. And he has a pretty unique strategy. First off, he's swing trading, which is, I think, probably what most of you do, right? I don't really know exactly, the experience level of all of our viewers and everyone in chat. And I don't think all of you day trade, and I'm not even sure if all of you invest. But I have a hunch that nearly all of you are swing trading, right? And swing trading just means you're trading for longer than short term, like longer than a day or two is your holding period, but shorter than I don't know, call it 6 months, right? I see a swing trade as anything. You're holding a position between like a couple days.
A lot of traders.
Couple days, a couple months is probably my definition. That's pretty arbitrary, but that's my definition of a swing trade. And so this is what he does. And he uses a strategy called harmonics, which I'll be honest with you, I don't really know what that is. And if you don't know what it is, then that's okay, because he'll explain it.
It's some pretty technical shit right there, man.
Yeah, it's technical. So he does a lot of stuff with momentum and reversals and breakouts, and he uses the MACD, the RSI, he uses Fibonacci.
It's what I say, Spencer, all the time. There's waves to this game, man. Yep. There's waves. If you understand the waves, then you don't get caught so much on the top, and you can catch those bottom dips. And so this is just an advanced form of catching the waves in the market.
Yep. All right. Well, let's see if we can bring him on just to say. Let's say hello before we start. Let's see if I can bring him on right now. We need to do like an AV test. So I hope this works. What's up, sir?
How's it going, guys?
How we doing?
Welcome.
We got sound, we got video.
We got sound and we got video.
Cool. It's going. Yeah, so I got a little group called Trading Nomadic. You guys gave me a pretty good introduction on my style of trading. Like you guys said, I always look for the reversal, and in swing trading, when you got a reversal, it's a sale to me, right? And that's the best time you could buy an asset, especially when it's reached an area of support. But I've got a little laundry list of things I like to look for that have confluence with my idea that it shows that you're going to get a reversal. And with swing trading, especially in a market like we've been seeing the last, month or so, it's not, it's not all up. It's not a bull market like we had last year. I mean, for the majority with the money printer and, everything, you throw a dart at the wall, it's going to stick to something that makes you money. And right now, especially, it's not the case. So with my strategy, I look for a list. It's got to meet all my criteria for me to want to take the trade, because the number one thing, aside from picking winning trades, is not picking a losing trade. Protecting your capital is probably one of the most important things to me, because without it, you can't make successful trades if you don't have any money left. And so that's one of the things that I cover with my group, that I express how important it is, position sizing. But just to give you guys a brief rundown of what I look for, like you said, how do you do the screen sharing on this?
On the bottom there's that button that says share, and you can share a specific window, your entire screen, or if you're in a browser, you can share a specific tab. And while you figure that out, I'm going to play a short video that we made. Very short video. Intro video for Trading Nomadic.
Drop that. Hit the like.
I dig it. All right, so just to run down some of these, the criteria that I look for when I'm making a trade, right? First off, I like something that's coming off a reversal. Something that's been downtrending. This is just an example. One of the trades that we had set up, I think this was beginning of March, beginning of this month. First off, I'm looking for something that's been in a downtrend, like I said, because it's basically an asset on sale. But just because something's going down, that doesn't mean it's going to reverse. It doesn't mean, what goes down doesn't have to come up necessarily. So timing's kind of important. And that brings me to the next thing I'm looking for. Not only am I looking for, like NEO here, it's been coming down since February 10th. You got all this price action, down, 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 with no real sign that it's coming up. Until you get into the next variable that I'm looking for, and that's there's some kind of divergence in this downtrend. And if you look down here on the MACD, which is, for anyone who doesn't know, this is your MACD. The histogram in red here is negative momentum. Positive momentum is going to be here in green. And the way I like to identify, a switch from this, you see this negative momentum down here coinciding with negative price action. The way I like to spot a reversal of this is using the MACD or the RSI. The RSI is going to be down here in the purple. But what I like to identify is, you see these different peaks, like right here is one of the lowest peaks of negative momentum on the MACD. And if you come up to the coinciding price action, when I'm identifying this stuff, I go with closed candles. I don't follow the wicks. You never know the reasoning behind the wicks, so I go with the closed part of the candle. And if you look, the peak of this MACD histogram right here lines up with this double bottom type candle up here. And if you go down to the bottom here, which is essentially the reversal point that I was looking for, and you make the same line on the histogram of negative momentum, it shows you that the negative momentum is subsiding. It's weaning. There's less momentum pulling the price down. And if you look up here, that's the opposite of what's going down here. The price is going down, but the negative momentum's it's weaning a little bit. I'm sorry about my phone there. So that means that there's less negative momentum pulling this price down, which could indicate that there's going to be a reversal of that price action. And that's when you get to the RSI. It's the same type of formula. If you got the price action coming down, but you've got the RSI going up, it shows you that there's a divergence. It's just bullish divergence, which shows you that the price is going to start moving in a different direction. This downtrend is getting weaker, and you're going to have a point where it flips. Obviously, you got to find context in it too. If we zoom in a little bit here, I'm on a 4-hour chart on NEO. If you zoom in a little bit, not only do we have this variable showing us that the trend is about to change, but we've also got this nice double bottom in here. You could see both candles bottomed out right there. So that would be another indication that we might be at that point where the price action starts to reflect what the oscillators are telling you, and that's bullish divergence. That means the negative momentum, the negative price action is about to take a turn. And another thing I like to look for is this point where it turns. I like to find if you look left, always look for the past, or look to the past of an asset to help you understand what's going on in the future, or not the future, in the present. And if you look right where this double bottom is, you've got this area right here where this wick topped out. So you've got resistance here, and then you come over to where we've got this double bottom, where these oscillators are indicating that we might have a turn. And well, that makes sense, because now we are taking what was resistance and now it's support. So that's just one more confirmation that tells me that this might be an area that we're gonna see that reversal. Another thing, you see this fancy design here I got, you guys brought it up already, but I like to look for harmonics in, it's just another pattern that you can identify that helps you understand, you know, where this might take place. Let me see if I got another one here. Apple's another one we've been looking at. I'm waiting on this one too. But this is what you call a bullish bat formation. It's a type of harmonic. It's an XABCD pattern. If you guys use TradingView or Benzinga, these are XABCD patterns right here. And this is the X. That's where the harmonic started. Your A is going to be your discernible swing high, which is here. B, not to digress too much in the middle of this, but a bullish harmonic is going to give you this M shape, right? And to show you what the opposite of that looks like, this is a Bitcoin chart, and you know, this peak right here kind of caught a lot of people off guard. You know, everybody thinks everything's going to keep going up, but one of the things we identified, we started identifying it here, is this harmonic pattern. This is a bearish harmonic pattern, which basically indicates that by the time we get to point D, you could see some negative price action. In a really bullish market like Bitcoin, it kind of overshot the D point of this XABCD because of how bullish everything is, and we almost didn't think it was going to play out. It doesn't have to, but the more factors you've got that indicate or that give you confluence of your idea, the better. It's like ingredients to making a recipe, baking a cake. I've heard people use that phrase before. They're all things you want to back up your idea. So in this XABCD pattern, this is a bearish shark. You got the X, which is going to be your peak, your initial peak. Your A is going to be your first swing low, and your retracement. And these are all line up with Fibonacci retracements, which I'll go into that a little bit later. But again, your second swing low is going to be your C, and then your D pattern. I mean, your D point is going to be the point where generally you're going to see negative price action. It's the completion of a bearish harmonic, and look what we got. You got negative price action. And if you look at the oscillators too here, the oscillators are confluent with the idea, right? We're expecting a downtrend at this D pattern. If you look down at the MACD, this is bearish confluence. The MACD is saying, yeah, look, the negative pressure is getting stronger. And then when it starts weaning off, you're going to start seeing a little bit of positive price action, which would just be confluence with what we're talking about.
Quick question from the chat: what harmonic scanner are you using? It's from Tony.
These I've had enough experience with harmonics where I can identify them fairly easily. There are harmonic scanners that you can get. I believe there's indicators on TradingView that will help pinpoint these. They're not 100%. They'll start telling you that that some patterns exist that aren't really valid, but that's where you would look to the oscillators for confluence to back up the idea that that is indeed harmonic that's going to play out. And like I said, you look down here, MACD is saying the same thing. If you look at the RSI from that peak, same thing. The RSI is going down. So that backs up my my theory that this is going to happen. And again, it's the W pattern is usually a bullish is a bullish or a bearish pattern, and the M's are going to be a bullish pattern. And let me see. And time scales is another thing I use to support what I'm looking at. Right, with swing trading, I like to stick to 4-hour and daily charts. For the most part, if you can find confluence, something to back up what you're looking at on those charts on a weekly or monthly, I mean, that's even better. It just shows you a broader pattern or a broader scope of what's happening. I see a lot of people trying to make trades on 5-minute, 30-minute, hour charts, and I'll look to those. If I'm placing a trade on something like this, for instance, Apple here, I've got this little mark here for once that price starts getting above this level, that's going to be the point where I would enter the trade. But what I would do is I would use some of these lower time frame charts to back up my idea, right? If the bigger time scales are telling me that we might see some price action to the upside, I'll look to the lower charts, whether it's for an entry, for confirmation, just on a shorter time scale, because anything you see on the smaller time scales is a little bit ahead of the stuff you're going to see on the larger time scales. But at the same time, they're not going to be as powerful. Like these harmonic patterns, they'll show up on, you could go to, to a 1-minute chart and you'll see the same patterns, but they're just not as powerful, and obviously they're not going to usher in as dramatic of a price change. With harmonic patterns, a bullish harmonic pattern, generally, if you're really trying to knock it out of the park, you would look for a reversal that comes all the way up to the C or up to the A. When I place my trades, it's always set it and forget it. For something like this, that's why I've got these little indicators that tell me, how much of a gain I'm going to be looking at, how much of a loss. Normally I'll put, if you use the long position tool, right, this would be my entry here at the orange. And this isn't where I would stop out. Once I take this trade, I'll probably look for, whether it's a daily chart or the 4-hour chart, for some kind of safe spot, obviously underneath my entry for a stop. An area that would indicate to me if the price action comes back down below my stop, well, none of this could end up not being valid at all. Just because, the chart looks, it's telling you one thing, whether it's market conditions, whether it's news-driven catalysts. Sometimes this stuff doesn't play out, or sometimes, it doesn't play out right away. So what I will do to make an equitable swing trade, I like to shoot for 3-to-1 reward to risk. That way, any trade I'm taking, I've only got to be right once out of 3 times. If you up it to 4-to-1, once out of 4 times is going to keep you in the game. But for a trade like this, if I was going to stop out, let's get a little bit closer here to if I was going to take a trade on Apple at this pivot point right here, which obviously if you look on this 4-hour chart, we've got, you know, this area right here. You've got a couple different points that top out right here. And that's where I came up with my entry point. I'm a little bit off with my line here, but you can see right here we got resistance. And if you look to the left, historically, same thing. This used to be support, resistance, support, and it's still going to reflect present. You know, anything from the past. I don't care how long it's been. I've traded assets that have a resistance from, you know, 6 years ago that ends up being valid present. It's usually reflected, and it's always something I consider when I'm entering a trade, right? Because if I was entering a trade at this point underneath here, for all I know, that this old support line is going to be resistance. Generally, once you cross over, it'll switch. But again, that's another thing you want to look for confirmation. To take, you know, this area as an example, you've got all this resistance, tried to get above it, and it got rejected. And you're right back down to the resistance. But we tried again, came all the way up here, and what did it do? It came back down to the resistance point, and it retested it. Ideally, that's what you want. You want to make sure that it was resistance, and now it's going to be a support level. And that's realistically, if I'm trying to get some of these higher targets, that's what I want to look for here. You know, if we get an impulse wave above this, comes back, tests it, and confirms that it's not resistance anymore. Now it's going to be a point of support. Generally, that's what I would want to look for, because just like, you know, well, actually right in front of my face, you got this impulse up, and then it didn't find any support. It got rejected, and it came all the way back down. So that's what I'm going to be looking for when I enter this trade. But back to what I was talking about with now I'm making a mess. What I want to look for is a 3-to-1 target. Like I said, when I take swing trades like this, I shoot for 3-to-1 to make it equitable, because every one of these trades they're not all going to go your way. If they all went your way, I mean, it would be too easy. But technical analysis gives you an edge, and that's what I trade off of. Obviously, news-driven catalysts are important, and sometimes they end up being, you know, the antagonist that ushers these new moves in. So what I would look for is if we end up breaking, what is this, 123.21? This isn't exact, because like I said, I like to look for the confirmation. I would set up the trade above the old resistance, and then I would set up a stop for this one.
Hey, quick question. What moving averages are those?
I've got a few of them on here. I know it looks really pretty, and I don't use them all of the time. I've just got them on here because sometimes when I'm scanning for assets, I like to see if there's correlation between some of these different moving averages, but I've got a few on here. The main ones that I like to look for are the 50, which is going to be this yellow one here, and the 200, which is a longer moving average. I like these two because you'll see, I mean, if you look at areas like this, you could see correlation between these moving averages and the price action. But another reason why I use the 50 and the 200 is I like to identify, I'm sure you guys have heard the phrase before, a golden cross. That is when you've got your 50, like right here, it's a potential coming up here. This 50 would come up and it's going to cross over the 200. And that would give you what's called a golden cross. And the opposite of that would be as if this 50, which happened right here, this is called the death cross. Dramatic, but I mean, it says what it does. When this 50, the shorter moving average, crosses over the longer moving average, you're going to see price action go down dramatically. And if you look, what happened, the price just kept getting flushed down. And on reverse, I'd be willing to bet okay, well, here you go. Here's an example of a golden cross. You got this 50 coming down, which, mind you, ushered in a death cross first, coming down here, and then when the 50 crosses again, look at this price action. I mean, you'll see dramatic price movements. I mean, again, context is important. Because both of these moving averages were in an uptrend, that kind of ushers in a more powerful move if you're looking for that type of trade setup. And there's some traders out there that's what they use. That's what they focus on. They look for these moving averages. I mean, your whole trade strategy could be based off of this. Some people you see this 50, once that price starts riding on top of that 50, it keeps on going until that trend is broken. Like the guys in the morning of your show say, the trend is your friend until it's not. And right here, as soon as this price action stopped riding on top of that 50, you get this big price movement down. Granted, with Apple at the time, it was uptrending in a bullish market. This was last summer. Once it regained that, same thing. It keeps dancing on top of that 50 moving average until, again, you look up here, it breaks a trend, and then until it gets back above there, I would consider this a bearish trend. And then you see again, it gets on top of it, rides it up for a little bit, same thing. Some guys, I mean, that's their strategy, and there's nothing wrong with that. I'll use it majority just for, I'll look for these events because obviously they do usher in pretty substantial price movement, but I use it more for confluence, or I'll look for like this 50 is being respected on the downside. Apple tried to get above that 50, got rejected, and until it did, I mean, I would consider this bearish territory. I wouldn't expect to see any substantial price movement to the upside until I got on the reverse side of that. And just to kind of reiterate what I was just talking about confirmation, now, if you look, Apple's trying to gain, it's trying to get back on top of this 50 moving average, which to me is a bullish indication if it can hold it up. And that's just one more thing that kind of gives me, it kind of tells me that everything I'm looking at, it's just another way of confirming it. I've got the purple, and I've got the pink one here. The purple one I don't use all the time, but it's MFI. It's basically a moving average that's based on momentum and volume. It works with the RSI. It's an algorithm that it doesn't always react to the price action, but it's something that I'll move on and off, especially when I'm scanning, just to see if there is some sort of confluence with that moving average and the price action. Right here, you don't really see much correlation between the two, but sometimes you will, and sometimes it's dead on. The pink one is a harmonic moving average, and these are all indicators that you can get on Benzinga Pro and TradingView. The pink one, this one you can actually see, if I zoom in a little bit here, you could see some correlation, whether it's, the 50 it's correlating to or not. Debatable, but if you look, kind of stops out right at that harmonic moving average. Same thing right here. This harmonic moving average is kind of gliding under the candles here, gliding above the candles here. And it's just one more thing that I'll look to for a little bit of confirmation. But like I was saying, with trades, I love the long position tool on TradingView because it'll tell you if you're equitable or not. For a trade like this, I would want to target 3 to 1. Right now, my stop is about 1%, 1.25% down. So I would want to look for at least about 4%, which would put me right at this this purple trend right here at 128.83. And again, I want to look for some sort of backup that says that's going to be a good target for me. That's where I would want to, whether it's take some profits or get out of a trade. I always put, other targets, because sometimes I'll take out half, or I'll take out, the winning part of my position here and leave a little bit for this, and I'll move my stop up to somewhere that makes sense at that point. But if I look to the left of this target right here, I've also got, I'm actually going to move some of these out of here so I could see some of this price action a little bit better. If I look to the left, well, right here, I've got resistance. So for all I know, when Apple breaks up above this, it might go here, right to my target, hit this resistance, and get rejected. Now, that's not to say it's going to come back down here, or whether it's this line down here. It might try to retest this area and then move on to these higher targets. But I always, before I enter a trade, that's one thing that's important. I always want to know my out. I always want to know my targets, because once you're in a trade, once you're in the zone, that's when your emotions get in, right? If you don't put a stop loss, I know plenty of traders, they don't use stop losses because sometimes they'll work against you. You'll get stopped out, and then the asset decides to go to every target you had. But I always put stop losses in with a little bit of room somewhere that would pretty much negate my idea. It would pretty much tell me, maybe you were wrong. Maybe none of this makes sense. Because that way, I don't have to really monitor anything. Once I'm in the trade, I've got my profit set. I've got my stop loss set. And I don't have to think about it. I don't have to watch it. If I'm doing 3 to 1 trades every single time, unless I'm just terrible, and unless I'm missing 3 out of 3 trades, it's going to end up working. It's going to end up being profitable for me. If I'm hitting 1 out of 3, I'm good. If I'm hitting 2 out of 3, even better. Generally, that's where most of my trades end up averaging out to. I usually do 2 out of 3. And if you follow all, your preset guidelines to taking a trade, you end up doing a lot better. With Apple specifically here, I've also got mapped out these little areas of accumulation. You can see the price action got rejected here. It's fallen all the way down, but right here it's kind of accumulating. Buyers came in, they tried to bring that price back up, it got rejected again. Same thing down here. You got a lower low, which means obviously you're still downtrending, but if you look, you got a lot of chop. You got a lot of accumulation going on here. And we tried to bring the price back up, got rejected again, came back down, but the difference is now we're accumulating at a higher zone. So what that tells me is you got more buyers coming in, more people are accumulating this asset. Next time it goes up, more than likely you're going to have a more substantial move. And right here, if you back up a little bit, this is an inverse head and shoulders pattern. You've got a shoulder right here, this first stop of accumulation. You've got a head, which is going to be lower, and then you've got another shoulder, which is basically, it's an upside down head and shoulders pattern. I mean, you could look at it as a rounding bottom, and up here is your neckline. This is the trend that we keep getting rejected on. And once this price gets above this, and that also comes into play with why I put my my entry here. So once the price action gets above that, not only are you breaking the supply line, you know, this is an area that people keep taking their profits, it keeps getting rejected. You're going to be above that. You've broken out of the supply line. You've got accumulation that's been taking place since, I mean, this is back the last week in February. So it's just one more detail, or one more reason for all this to make sense. And then again, once you get above this line, I mean, if you wanted to wait it out a little bit further, I've got a lot of I have a lot of, I believe this trade's going to happen, right? So I gave myself a little bit of room here. Once we get above this resistance here, I think that's when Apple's going to start to make higher highs.
Couple chat questions here. How far back do you start your analysis, and when do you start a new trend?
It depends on the asset. I mean, like I said, if you've got a weekly chart backing up, well, I actually have. This one is one we did the other day. Now, mind you, this is the part of the chart that I did with the 4-hour and with the daily. I've had all the variables I was looking for, almost the same kind of pattern as Apple, but Rockwell Medical it's a medical stock, medical, bio, stuff like that. They're so volatile. So I kind of take some of this stuff with a grain of salt, but the reason why I ended up taking this trade is because if we look on, I think it's all the way on the monthly chart. On this monthly chart, we've got this harmonic that, well, maybe it was on the daily. There was a harmonic here, unless it got moved. Regardless, I identified this bullish harmonic. You can see it's making that M formation that I was talking about on the monthly chart. And if you look, we've also got this supply line. This is all the way from November 15th, just down, 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 getting rejected time and time again. And over here, we've broken that supply line. So that's telling me on this huge time scale, we're getting out of a downtrend on the monthly chart. I don't normally go back as far as a monthly time frames, but if you got back up on a weekly chart as well, and if you look, the weekly started shifting here. This is bullish divergence here. The RSI, this is class C, because the RSI bottomed out. It did a double bottom, but while it was doing that, you still had price action coming down. This isn't as strong as class A, which class A, you got price action coming down. You've got the RSI going up. That shows you a complete opposite trend. This one's showing you that the RSI is not getting any lower, even though the price is still coming down. The RSI is not getting any lower. So if it can't get any lower, you're going to start seeing that reverse, which would ultimately be reflected in the price, once that flips. There's also, that's regular bullish divergence. There's also hidden divergence, which is it's the same theory, but it's just backwards. And I do actually have, for anyone who is wondering about what I'm talking about here, I got this one online. It's just something you could find on Google that shows you some of these patterns and, you know, the variables that need to be consistent to, you know, for them to be valid, right? And it's all Fibonacci retracement levels. And the reason why I like the harmonics is because they do work off Fibonacci, and I use Fibonacci to gauge, you know, if I'm looking at an asset like RMTI, just as an example, that's made this huge peak, this huge run up with no, you know, no stops, no accumulation. That's when I would use Fibonacci, you know, first. Oh, I'm sorry. And what the Fibonacci levels are going to show me, are the retracements. That's a Fibonacci retracement. 382 and the 618 that's the golden area that you look for an asset that's coming down. That's generally where they reverse for a retracement, and the harmonics are dependent on how far they go. But the 618 is most common, and if you look, the 618 lines right up with some of these areas, you know, where the price action tried to start, you know, turning around, start coming back up. You know, we've got this area. We got a couple points where these wicks tried to find support here. It didn't happen. It got rejected coming up to the supply line, came down further. This came down. If you see, this is the 786. So that's a 78% retrace. And same thing. You could see these wicks. I'm sorry if this is all over the place here. I'm just trying to get this. And this one actually, RMTI, and like I said, with medical stocks are so volatile. This retraced 100% right from where it started, all the way down here on the fib retracement. But that's another thing I'll use, whether it's for, you know, looking for a reversal on the corrections, or when I'm looking for areas on the way up as well. I'm trying to think.
There's a couple more chat questions here.
Yeah, sure.
What does? Wait a minute. Are you using SMAs or EMAs?
They're just regular moving averages. I'll switch depending on. I also trade crypto. I'll go back and forth. I'll use an exponential on crypto sometimes. I look to the chart to see what's confluent. Okay. You know, what looks like it's being reflected with the price action. And this is the one I was talking about earlier. This is the harmonic moving average here, and you could see the price action is kind of following along. It's reflecting. It's interacting with this line here. And if we put, these are EMAs, the 50 and the 200, same thing. You're seeing a reaction to these moving averages, and generally that's what I would use when I'm looking at assets, when I'm scanning, you know, especially for people that do day trade. Sometimes that's their strategy, or even swing trading. Like you see this price actions being reflected on this 50 moving average, and it's doing the bounce. A lot of times once you get above this 50, it's just going to keep on going and keep on going until it crosses underneath. And that's where, you know, if you're taking short positions, or if you're just getting out of a trade, I mean, that would be something that I would look as an indicator that, hey, maybe the trend is starting to move against me a little bit.
Got it. Can you maybe look at Tesla? I see some chat comments about Tesla.
Yeah, let's move up Tesla. Here, I'll clear this out.
And then after we'll look at Intel. They had news tonight.
So I'm starting out on the daily. I cleared off everything of this off this chart already. And Tesla is one that I've been looking for an entry. I think I got back into Tesla when we initially bounced here. Just a little bit. I dipped my toes in to see if, because it looks like this price action here was trying to stay above the 200, and at this point it still is on a broader scope. But if I was looking at Tesla for a trade on the daily, I would first look at my oscillators. Right here, if we were taking a trade on Tesla down here, we had a reason. If you look down at the RSI is making higher highs. And if you look up at the price action, the price action is making lower lows still. So that would be an indicator. Obviously, like I said, I'd reference some of the other things that I look for, but that would have been a perfect point, and it played out to take a trade on Tesla because RSI is gaining strength, the price action is coming down. That would imply impending price action to the upside. It means we're going to start seeing this trend coming down reverse. Now on the daily chart on Tesla, if I was trying to enter a trade, I don't really have much here that would tell me that's what I should do. If anything, I've got the positive momentum here coming down. So that's saying that, the positive momentum is starting to get tired. On the RSI, you've got the RSI. This is showing a continuation. It's bullish confluence. If you were gonna put a name on that, it just says, yeah, the price action is going up. It's getting stronger. It would be more of a continuation trade, which I'll take them now and then, but it's not something I look for because the opportunity with my guidelines would have been right here. And if we took a trade on Tesla right where opportunity presented itself, we would still be good. We would already be in this trade. And right now, the RSI is saying, hey, you're still going up. But one thing I'm looking at the RSI right now is the RSI's got this little downtrend going on, which would be bearish divergence. The price action's going, well, actually that's confluence with what's going on with the price. But until this RSI starts to break up higher than this downtrend here, I wouldn't want to enter a trade in it. And realistically, once you put in this second peak that shows the RSI isn't going to make another high, that would be, if you look up here at the price action, that would have been a good time to get out. That was reflected at 700, and until this RSI bottomed out down here, which almost looked like it's going to try to turn around, but where the RSI bottomed out down here, you're looking at 620. Actually, yeah, about 620. If I was looking at Tesla though, as far as a levels, I would look for, you've got this low right here, which is 618. You almost hit it again, but you're still stuck under this 50 moving average. Until I got more information on the oscillators, I wouldn't take a trade on this, because for all I know, this positive momentum that's starting to fade away could keep on fading, and we could end up seeing more negative momentum, bringing it down. Same thing with the RSI. Until this RSI says, hey, we're going higher, this could just keep going, zigzagging all the way down until it presents, a pattern like here on the RSI. You know, until we get another point that says, hey, things are turning around, now would be a good time to take this trade. What was the other one you said?
Intel.
IBM, is that what you...
Intel.
Intel, much different. INTC. Now, if you were looking for a trade on Intel, you've got this. This would have been a good point right here. The yellow's hidden bullish divergence. It's the same idea, but it's more of a continuation pattern. I would look for, if we pull the MACD up a little bit. See, this MACD is making lower lows, and you've got the price action making higher highs. So right here at this peak, that would have been where I would enter. And if you look up here, we've got confluence with this 50 moving average. Oops. And like I said, I like the daily chart. Daily chart, I use that more to back up what I see on the 4 hour. If I was looking for a trend, let me see. Price action going up. And that's another thing. I didn't mention it before, but this chart is a perfect example. All this stuff is going to be a lot more powerful when you're already in an uptrend. You know, if you've got variables that tell you that you're going to start seeing higher prices and you're already in this nice uptrend. Intel's been going up since right before Christmas. And to back up the things I was saying about my strategy, you could come look at some of these areas in the past. Right before this started going on, you've got price actions going down. Well, that's actually confluent with it. You've got a little bit of bullish divergence right here. It didn't play out immediately, but you've got this MACD starting to go positive, starting to head towards positive, right? While that price was going down, it didn't really play out too much here because you got this big dive. But if you go back to what we were saying about this moving average, that would have been a good indicator in this example right here, because price action started reflecting that divergence, but once it fell under that 50, it dumped. And if you look down here, this doesn't show you, I mean, this is technically a form of bullish divergence here. Well, confluence anyway, because the MACD is starting to go positive, and at the same time, the price action is reflecting the same. So that would have been an indication of a continuation coming up here. If you were looking for a divergence pattern, let me see what we got in the daily. See, the daily chart looks good. I mean, it's confluent with this uptrend continuing. You've got hidden bullish divergence here, which is, oops. And I switched out. I lost you here for a second. If we make this MACD a little bit bigger here, this would be, you see this little MACD, this little negative MACD histogram coming here, and then you've got price action going up. And that's the same thing. That's showing you that you're going to keep on going to the upside. What I don't like here is on this RSI, you do have bearish divergence. And that's actually recent. You've got a lower high on the RSI, which is showing you that the strength, even though that this price action is going up, this is basically the opposite of what I was describing earlier with the bullish divergence. It's telling you the opposite. Even though your price is still going up, the strength behind these moves is starting to go down. You're getting, the buyers are showing exhaustion, and it played out a little bit here already. Price peaked out here, started making lower lows. And you got the same thing on the MACD. You barely got a downtrend here. You could almost, this would be more Class C, which Class C is, like I was talking about with the bullish divergence. The positive momentum isn't getting any stronger, even though the price is getting higher, which shows you that you might see some exhaustion, and you're going to see a little bit of down pressure after this point here. And it played out. When I'm scanning for stocks, that's just the type of stuff I look for. Because I would like to see something that's coming off the highs. A lot of newer traders, the instinct is they see something, skyrocketing, they want to get in, and unfortunately, it works sometimes. In a crazy bull market like we saw in most of 2020, stuff like that might end up working out for you. But I look for value. You got, if I was looking at Intel here, you got this run down, you got this trend coming down, which is your supply line. So if I was watching Intel, I would have been watching, this is on a daily chart. The same stuff applies to the lower time frame charts, but if I was watching, I would have been watching for it to break this supply line. And if you look down here, you've got exactly what we're looking for. Actually, right here is what you'd want to see. You've got momentum is starting to switch. Price is coming down, but the momentum is easing, or the negative momentum is easing up. And then once you get to these two peaks here, this is arguably Class C, because the price bottomed out. Class B, the price bottomed out, but this negative momentum is getting a lot. It's weaning out. It's starting to head towards the upside again. And if you look at these two peaks in reflection of the price, as soon as this divergence is identified, it's reflected in the price almost immediately. And then if you look down here, this peak, where is it? This peak is showing confluence. It's showing that would be a continuation. The divergence is more for a reversal confluence, which when the price agrees with the oscillators, that just shows you there's a continuation. It means it's going to keep on doing what it was doing. And if you look up here at the price, where was I? If you look here at the price, this would have been our confluence. MACD says the same thing. It's heading towards positive. The price is going up. So that agreed that it's going to continue. And now if you look at the price action, once we got confirmation that that's going to continue, the price action continued on up. And if you get in on little dips like this, when you've got confluence, when there's going to be a continuation, there's nothing wrong with that, as long as you're getting in at the value areas, which would be down here. And if you were looking for targets to get out or to take profit, then you want to look to this upsloping supply line. if we got in down here where we saw the continuation, but we've got this supply line coming up here, and I bet you if I take this back, got this nice supply line coming up. That would be an area if I was, trying to make a short-term trade or take some profits. Once I got up to this point, that's where I would take my profits, and then I'd wait for, another indication, which you've got this right here. And I mean, it's the same way I go about any trade. But like I said, when I'm entering new trades, I like everything to agree. If I'm looking at the 4 hour before I say, hey, that's a trade I want to get into, I'm going to look. I know somebody asked earlier, what kind of time frames do I look at? Look at as many as you can. If I've got a good trade on the 4 hour, which right here on Intel specifically, this momentum keeps on getting less and less and less, and the price is going up and up and up. So that's a continuation pattern. But I like all the ingredients. You could take continuation trades or breakout trades, and breakout trades generally are going to end up lining up with these divergence patterns. When you've got a supply line like this coming down, when we break it, I'm willing to bet in most cases, if you look down at the oscillators for confirmation, you're going to have these patterns that I was talking about. And you do. You can see the divergence here.
All right, and just as we wrap up here, where can people find you? And
on Twitter, I discuss a lot of the trades I'm entering. Obviously, none of them are ever advice. Anything I post on our Twitter account, it's a kind of a new brand for me. It's something that I've just got going this year. I just read charts. I don't predict what's going to happen. Obviously, always do your own research. None of it's ever trading advice, but if you guys are looking for trades, if you want me to take a look at tickers, I do it for my group, and I share it on Twitter the most. That's where I'm most active. It's an easy platform for me to share my thoughts and get feedback. And as you guys have mentioned plenty of times on your show, Twitter is a great place for traders. A lot of people sharing advice. It gives you a broader look at the market that you might not have seen otherwise. So if you want to learn more about how I do things, if you want, if you're interested in, maybe seeing some of the trades that I'm waiting on, that I'm in, that we're waiting for to play out, that would be where I share my the most of the trading that we're doing. That's where you're going to find it all.
All right, the handle's up on the screen at Trade Nomadic. Guys, smash that like button. Let's go. I'm sorry?
I said, let's get all the likes.
All the likes, because we've been on streaming for 11 hours.
You guys are champs.
11 freaking hours. That's how we do things here. All right. Handle up on screen. Smash that like Trade Nomadic. Thanks a lot, man. This is great. It's always great to learn new strategies, hear from people. We got some good questions from our chat. Hope you all like that. And thanks a lot, man.
Yeah, I appreciate it, guys. Thank you.